Hey guys, Daniel here and welcome back to another video. Here today, I want to focus in on Voyager Digital and take a look at my long-term price targets. Now I know I've talked about these price targets in the past, but in this video, I want to, not just look at these long-term price targets and explain exactly where I think Voyager is going to be trading at 4 years down the road, but dig a bit deeper and take a look at different scenarios of, what if assets under management are a bit lower than they are today? What if they're making less money off of their customer assets? What if they're trading at a lower valuation? I want to factor in all of those scenarios and come up with potential, more bearish targets for Voyager to see, how would my price target differ if, assets under management are 20 billion as opposed to 50 billion. So if you enjoy this video, guys, make sure to hit that like button. And if you have not joined the Finance Channel Discord server yet, it's completely free to join. We talk all about stocks, crypto, finance. It'll be the link in the description down below. You can join there and let's chat. So when we look at my long-term price targets here, when we look at this, the current share price, we're going to look at the valuation first and foremost. The current share price is $21.27. This is where Voyager essentially traded at last. This is where they closed on Friday. We multiply that by shares outstanding of 170 million to get a current market cap of right around $3.6 billion. Now, when we talk about this number of shares outstanding, yesterday we had a situation where Voyager announced essentially the conversion of certain warrants, and I made a video on this, so I'm not going to touch too much on it, but the thing about that is that we're getting a lot of shares released into the public next week, and some people think of that as dilution, but this number here, this 170 million shares, this was said by Steve Ehrlich, the CEO of Voyager Digital, to be the fully diluted share count. So from my understanding, this number actually includes these shares that are getting released into the public next week. If they don't, it's just, we got to add 6 million shares essentially to here. And it doesn't make too big of a difference, but I'm assuming that Steve Ehrlich is right in saying that 170 million shares is the fully diluted count. So that's the current valuation. We have Voyager Digital trading at a market cap of right around $3.6 billion. Now, let's take a look at my price targets looking out to 2024. I use assets under management of $50 billion. Now, when we look at assets under management, this is essentially the amount of customer assets held within Voyager. Currently, this number sits at under $3 billion on Steve Ehrlich's interview on CNBC. He actually mentioned that they're almost at $3 billion. He kind of gave it away. So it would not surprise me to see Voyager at over $3 billion by the end of April. We'll see if that happens. But either way, I think Voyager has a clear path to over $10 billion in assets under management by the end of 2021, and easily over $50 billion in customer assets by 2024 if we don't get more of a pullback in the cryptocurrency market. Now, when we look at the assets under management monetization rate, this is essentially the number of customer assets that goes directly to revenue on a yearly basis. So if we have $50 billion in assets under management and the assets under management monetization rate is 10%, $5 billion goes down to revenue on a yearly basis. So, this is my kind of estimate here. When we look at this monetization rate, currently it sits at right around 15 to 16%, but the CEO said they expect this number to drop to 10 to 12% over the longer run. We'll look at lower monetization rates in a second here, but I think 10% is very fair. This is obviously the money they collect off of each transaction. So when we look at gross margins, Steve Ehrlich, the CEO, again, a lot of this is coming from Steve Ehrlich. It's great that he's up to date with all of these figures, and he really expresses them in each of his interviews, which is why it's so important to really listen in whenever he's speaking. He said that their EBITDA margins, so earnings before interest, taxes, depreciations, and amortizations, are in line or pretty in line with Coinbase. Now, I looked at Coinbase a couple of weeks ago, looked through their S1, looked through their quarterly report, annual report, and the margins this business is putting out is absolutely incredible, guys. Coinbase as a company had margins of 32% for full year 2020 and margins of 43% for the first quarter of 2021. So that showcases the potential profitability of a cryptocurrency exchange like Voyager. So when we take a net income margin of right around 35%, I think that's very, very reasonable for Voyager to hit over the longer run. So if we take 35% of their total revenue, $5 billion, we get around $1.75 billion in net income by 2024, right around there. So if we take that total net income and apply a price to earnings ratio of 60, again, we'll play around with this in a second here. I think a 60 is fair given that the cryptocurrency kind of market as a whole is experiencing a lot of demand from retail and institutional investors. And I think a company like Voyager really differentiates themselves when it comes to the crypto market in general. And the growth rate, the profitability, I think that justifies a 60. Again, we'll look at this a little differently in a second here. But if you multiply this $1.75 billion in net income by a 60 price to earnings ratio, you get a market cap in 2024 of $105 billion, or a price target of right around $600 per share. And you can see the different percentage upsides here, whether it's just regular percentage or compounded over the next 4 years. So obviously, this is why the opportunity with Voyager is so phenomenal, in my opinion. All they have to do at this moment in time is, potentially 20x their assets under management, 18x their assets under management. And I think there's a clear path for the stock to 30x, as crazy as that sounds. If you really understand Voyager and where they're coming from with these numbers, it really is quite achievable for them to hit this. I mean, Coinbase as a company has, I believe, over $200 billion in assets under management. So I think that really shows the potential for Voyager as a company. And given the growth they've experienced in assets under management over the past kind of few months here, I really think $50 billion is achievable as long as the cryptocurrency market continues to expand and doesn't enter a bit of a cold winter. I'll make a video on the cold winter scenario within the next kind of week or two here. I know it is a pretty serious topic, but just generally speaking, this is my price target over the long run. Now let's take a look at what would happen if we decreased a few of these statistics here. So first, we're going to play around with this. We're going to, again, assume the valuation stays the same. This $200 million in cash, phenomenal. Voyager, very profitable company. That won't change. So what we're not going to change with any of these estimates here is the profitability, right? Because that does not have anything to do with essentially company execution, as these margins are already up here. And when we look at kind of dilution here, this doesn't change either, because Voyager is a profitable company and they have a lot on their balance sheet. So we're going to experiment with three main figures. 1, assets under management. 2, the assets under management monetization rate. And 3, the price to earnings ratio. These are the three things we have to play around with. First, let's take a look at this. Let's assume that Voyager does hit this $50 billion in assets under management, but let's say the monetization rate decreases. I think this is the most likely scenario, to be completely honest with you guys. I have seen estimates going as low as around 7%. Essentially, the asset under management monetization rate going down to 7% over the long run. So let's be pretty extra bearish here and go 5%, meaning that the revenue they're making off of their assets under management essentially get cut in half. Once we do that, we'll see total revenue drops to $2.5 billion. Total net income drops to $875 million. And if we apply that same PE ratio of 60, we still get a $50 billion company, $300 per share, or 14x on the upside. Still an absolutely phenomenal investment if that monetization rate declines. Now, let's assume that potentially assets under management decline as well. Now, they originally had around $20 billion in assets under management as their goal, but they said that's very conservative back in January to February and updated that to $50 billion in assets under management as their goal by 2023 to 2024, back in around March and February. So let's say we don't get $50 billion in assets under management and we actually get $20 billion. This is what they originally said. I hope that's right. No, we need to add another zero here. Let's say they hit $20 billion in customer assets under management and maintain only a 5% assets under management monetization rate. We still get upside of almost 6x over the next 3 to 4 years. And essentially, that's a compounded rate of around 55%. So we're still trading significantly higher, even though the profitability of, or not the profitability, the amount of revenue they're making off of their assets under management gets cut in half, and their total assets under management gets cut by literally 60%, right? So now let's keep going here. We're still trading 6x higher. Let's see how low we can go. With the price to earnings ratio, let's say the sentiment around cryptocurrency changes in a massive way to the point where these companies are trading at lower multiples. Let's say that the price to earnings ratio goes to 40, right? I think this is, reasonable. We still get a 4x on the upside for Voyager. Let's say they trade at a 30 price to earnings ratio. This is absurd in my opinion. They still have upside of 3x. Let's say they trade at a price to earnings ratio of 20. You still double up your money. Even though we took the price to earnings ratio, cut that by 2/3. We cut their monetization rate by half. We cut their assets under management by $30 billion, and we still get a double up in share price over the next 3 years, which, compared to just generally a lot of these generic investments, is still a phenomenal rate of return. So, I think a 20 is just absurd. This is what value companies trade at, and there's no reason Voyager as a company should be trading at a 20 given their profitability and revenue growth. So let's use a 40 here, but let's go back up to this assets under management figure and play a little more with this. I have $20 billion here. Let's cut this again down to potentially, $10 billion in customer assets. We still get that double up in share price, right? And let's assume potentially this declines to 8 billion. We still get 50%. Let's play around and see how low this figure has to go for us to actually lose money on this investment. $5 billion in customer assets under management with a monetization rate that is 5% as opposed to its current 16% and a price to earnings ratio is 40. That's what has to happen for you to break even on your money. This is crazy, guys. When I look at this, when I see assets under management of $5 billion needed to be hit for me to break even, and then a monetization rate needing to be cut in literally by 2/3, this situation is so unlikely outside of the scenario where we see a crypto bear cold winter that essentially crushes Bitcoin, Ethereum, VGX token, Binance coin, etc. over the next 4 years. I do not see this scenario happening. And when we see this, it makes me extra bullish on this company because, when they're trading at, or not trading, when they have right around $3 billion in customer assets under management at this moment in time, and I expect this company to get $10 billion in customer assets under management by the end of this year. Seeing this scenario here makes me so much more bullish on this company, as it makes me really believe that the things that need to happen with Voyager are so unlikely that I feel comfortable making this a 40-50% weighting of my portfolio, which is where it's at today. So that's what I'm thinking about Voyager, guys. That's why I am so incredibly bullish on this company over the long run. You can use conservative numbers, bearish numbers, and you still get a decent to phenomenal return on your investment over the next 4 years. And that is why Voyager is my cryptocurrency play. That is why I'm confident holding it over the next 5 years. And I really hope this video brought you some new perspective and some value. If it did, make sure to hit that like button and let me know, if you own Voyager or your price targets down in the comment section down below. I really appreciate you being here. Thank you so much for watching and have a great day.